I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, June 7th. We've just got two markets for you today. We're going to touch on soybeans, then wrap things up with live cattle. To kick things off, we've got the July soybeans pulled up here, and it was a nice day to the upside. But if you zoom out, kind of look at where we've been over the last week and a half, we really haven't gone anywhere too fast. With each of these big rallies over the past week and a half, they've been met with sharp sell-offs, and we really haven't gone anywhere except sideways despite the wide-ranging trades on a daily basis. I think at the end of last week, prior to Friday's session, we were averaging about a 52-cent range in the previous 5 sessions, and today was more of the same. From the technical standpoint, rallying back towards the upper end of the trendline resistance. This is an opportunity, I think, to sell against a break and close above here. That's your tap out point where you rip the Band-Aid off, move on, and reset your position. But I think from a producer's standpoint especially, this is an opportunity to look to the short side or get some hedges on with pretty well-defined risk on a break and close above. A failure here, I think, takes us back towards $17, which has been a big barrier for the bulls to defend. They've been able to do a pretty good job of that recently, but a break and close below $17, and you could start to see some additional long liquidation take us down towards trendline support, as well as the 50-day moving average, which comes in closer to, where is it, just above 1650, so right in line with trendline support there. So that's what we're looking at for the soybean market, July. Moving over to live cattle, we've got the August contract pulled up here, and we are just right in a meat grinder here near 134, trying to get out above this resistance point so we can make a move towards these moving averages up near 136, 137, which we've been talking about in recent daily reports, as well as the recent interviews with RFD TV. Failure here at near this 134, 135 area could slap us back down towards the low end of the range, 130, but I'm continuing to be upbeat, at least for the time being, that we can break out above here, narrow the gap with the cash market, and again get towards these 137 area and potentially above. If you recall, we've got this gap all the way back from April. That comes in closer to 139, 140 area. That's a big ask and a pretty tall order considering the cash market hasn't done a whole lot recently. So we're kind of tempering the expectations, thinking we can make a run back the 100-day moving average at least. That comes in near 136.65. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.